Anemic, ominous forces, rising turbulence, just some of the words the International Monetary Fund is using to describe the global economy for this year and next.
The IMF's World Economic Outlook, released a couple of hours ago, predicts global growth will bottom out at 2.8% this year, before rising modestly to 3% next year. This is the IMF's lowest medium-term forecast in decades.
Well, looking at inflation, which has raged across much of the world, the IMF predicts it will come down, but more slowly than previously thought. It should fall to 7% this year and drop to 4.9% next year, mainly because of a sharp reversal in energy and food prices.
Well, factors affecting what the IMF dubs its anemic outlook are the scarring impact of the pandemic, the conflict in Ukraine, and rising threat of geoeconomic fragmentation leading to trade tensions. Well, Petya Koeva is Deputy Director of the Research Department at the International Monetary Fund.
We are seeing a rocky recovery for the global economy. We do expect growth to bottom out this year, but at the same time, the fog has thickened, and we do see a lot of downside risks to our baseline forecast.
So what are those downside risks?
Part of it is that inflation has turned out to be much stickier than we previously thought. And if it were to be even more sticky going forward, that would require further tightening of monetary policy, which would, of course, affect growth. And another risk is what we've seen over the past month is that after a long period of low interest rates, as those interest rates go up, we could have financial sector turbulence. So, of course, that if those risks were to materialize, that would also have a material impact on the forecast.
Of course, what we've seen in the banking sector has really just demonstrated how fragile the situation is. But there are some bright spots, aren't there? It's a different picture region to region. Break down that global picture for us.
Yes, we do see emerging markets growing at higher rates. And I think part of that is just because they're catching up to the advanced economies in terms of growth rates. But it's also because we have countries such as India and China, and especially with the China reopening, that is one of the bright spots in the global economy.
How important is China as the world is chasing growth and a robust recovery?
Well, it is the second largest economy in the world, so its reopening is really boosting that global growth. We're expecting China to grow at 5.2% this year, and some of this growth would also have positive spillovers on the region and, of course, the rest of the world.
You touched on inflation. It hasn't turned that decisive corner that economists were hoping for, has it?
Well, we are expecting inflation to come down this year, but you're right that it's taken longer than what we previously thought. And we have seen signs that headline inflation has turned, but core inflation, I think we're still expecting that turn to happen in many countries this year, which means that monetary policy does need to stay tight in order to address that inflation problem.
So central banks should continue what they're doing or change it up a bit?
Well, we talk about central banks being steady but ready. So in a world where financial sector risks are contained, which is what we see at the moment, we think that they should be steady with their anti-inflationary stance. But if things were to change, then, of course, they would need to be ready to react to that, including using other tools that they have to address potential financial stability issues.